The name of the show is Buy Now, Sell Now Weekend, and of course it empowers you for the entire week ahead. Hi, I'm Avandabas.
And I'm Megha Chada. We've got a cracker of a show lined up for you, so let's give you a heads up on all that we will be discussing. First up, we'll be taking up your individual stock-specific queries on a Chambal Fertilizer, Hanum Toys as well as GVK Power.
We also have our Portfolio Advisor segment today on the show. So today up for discussion is Mr. Pankaj Parikh's portfolio.
And to discuss the fundamentals of the markets, we've got Avinash Gorakhshekhar, who's the founder, director of moneyinvestment.in, as well as Mitesh Thakkar, technical analyst at miteshthakkar.com, who joins us on the technicals of the market. So first off, let's go straight off to the first query for the day then. This one comes in from Amit Sheth in Mumbai. Let's hear him out.
I have bought Chambal Fertilizers at 99 rupees. And it is been last from few months it is being lying at around 70 to 75 rupees. So should I exit and invest in another fertilizer based share, or should I continue and wait for the 80 90 landmark and exit out?
What should Amit do? Well, in light of the fact that there has been the news of increase in urea prices to the ministries, which has been delayed time and again, the stock also is facing a lot of resistance at its 200 daily moving average. So Avinash, first after you, is Chambal a good bet for Amit because he's losing out on this?
Avan, I think if he has a slightly medium term kind of call, I think in the very short term maybe the stock may not see a big upside, but the stock has got some big positives lined up. I think, as you rightly said, the urea price hike of roughly about 8 to 10% is very much on the cards, and definitely Chambal is a big beneficiary there. Also, in the last conference call, the management has clearly mentioned that their IT business, which actually deals with mortgage finance in the US, is going to show EBITDA positive margins from the coming quarter onwards. Mind you, this business actually incurred a EBITDA loss of 75 crores last year. So if it does break even in the coming quarter, then I think this could be a big re-rating trigger for the stock. And Chambal is not seriously looking at its shipping business. In fact, there have been market reports that possibly shipping could be disposed of to some buyers, which could also bring in a cash value to the tune of over 600-700 crores. So I think, having said this, I would say that if he can average now and wait for a couple of months, I think clearly Chambal has got all the makings of going to roughly about 90 to 100 rupees, and he could possibly get a decent upside from his cost price.
Okay, so Amit, if you have a medium-term time horizon, fundamentally Avinash believes you can stay invested. But what about the technicals then? It's up close to 10.5% for the week, but Mitesh, it's seeing a fair bit of resistance at the 200-day moving average. So from a medium-term perspective, what would your call be?
I think Chambal, after a lot of languishing, while it did hit the 200-day average and did not manage to get past, let's not forget that in this week itself, the stock has gone up by about 10%. After appreciating this much and then hitting an important technical level means that you might take some effort to get past those levels, but with this kind of movement this week the stock has definitely improved its technical scenario. My sense is that after a bit of consolidation the stock will manage to get past levels of 81, 82, which is the 200-day average, and I do see the stock hitting a target of about 90 to 94 on the upside in the next few weeks to come by once the stock manages to trade about the 200-day average. I think it's difficult to say whether the stock will be able to get past those levels or not. So for the timing, I think I would advise to hold on. I think around 90, 94 when he sells, he'll have a very minimal loss, and then he can look to get into some other stock.
Okay, Mitesh says that an upside target of 90 cannot be ruled out, so it's a unanimous hold call from both our experts. Well, Amit Sheth has another query. This time around, it's on Hanum Toys.
I have another question regarding the Hanum Toys. I have bought that at 212 at 50 quantity, and I have seen there is a very big dip in the share price. So what should I do with it?
Okay, so he picked up the share at 212 and right now it's trading in a range of close to 130 odd. So it's a fair bit of loss from his investment. So Mitesh, what would you advise, specifically given that it's underperformed the benchmarks as well?
It's clearly underperformed the benchmarks. It's been in a downtrend after having a very good couple of years, few years back. I think it's gone into a downtrend. There is a chance that we might see a reversal. Now that reversal has to be confirmed when the stock starts trading above 145, 150 odd levels. That's an important pivot point on the weekly charts. I'm not very sure of that. There's a good chance that we might actually get past those levels. What I can advise in this kind of scenario is that keep a stop loss below 110. which is the last swing low on the weekly and the monthly charts. As long as that level is held on, there is a good chance of a upside breakout. Once the stock manages to get past 145, 150, you will see a strong momentum build up happening over there, and the stock can then hit levels of about 190 on the upside. I think that's where I would recommend to exit. Once he does that, I think the loss will be minimal from his buying price, and around 190 I find it difficult that the stock will actually be able to get past those levels. So 190 looks a very difficult level to cross for the stock for the time being. So in the medium term, this could be about 8 to 10 weeks kind of a call. I think 190 is the maximum which I can see the stock to hit.
Okay, with a stop loss at 110. Avinash, how are the fundamentals shaping up for this counter?
Avan, I think clearly, on an annual basis, the company has done pretty well. In fact, the company recorded a EPS of 45 rupees. But if one compares the previous year, I think numbers were slightly depressed. In fact, profitability at the net level was around 115 odd crores compared to 125 crores last year. My suggestion to the investor would be that, currently the kind of price he has purchased the stock, it's very difficult to expect that at least in the next couple of quarters, he could possibly expect this price. So it's sensible for him to actually get out of this stock and probably get into something else. I mean, my suggestion would be that, there's a stock called Shashun Pharma, available at around 122 odd rupees. Here I believe the earnings traction and the kind of valuation this company has thrown up could possibly give him an opportunity to actually cover up his losses in the next 6 months, and he could possibly get a price of around 150, 160. So I think he should switch over to this stock. Hanung may not provide him the kind of upside he might be wanting to see in the very near term, at least in the next 6 months.
Okay, so it's a divergent view, Amit, that's coming in from our two experts. Mitesh is recommending that you hold on if you have an 8 to 10 week horizon. Avinash, on the other hand, is recommending that you book your losses and look at investing in a Shashun Pharma. Away from that, let's get on to the third query for the day then. This one comes in from Preeti Rani in Chennai, and it's on GVK Power.
Sir, I am holding GVK shares 500 in numbers. These shares I have bought at the rate of 38 rupees. Please advise me whether I should hold it or sell it off.
Okay, so Preeti Rani has bought it at a price of 38 rupees, meaning she's losing out on that investment. Avinash, the management clearly said that they will not be going in for any new power projects till their $10 billion Alpha Coal and Rail project in Australia is up and running. It's nearly half from last July, so what should she do?
Avan, my guess is, if she has a slightly medium to longer term call, this company has got a large bouquet of assets in its balance sheet. From what I understand is that the company is seriously looking at, getting a strategic investor for the airport business. The Singapore coal subsidiary also, they have invited bidders for some private equity funds. Probably, once these events do happen, I think there could be some re-rating on the stock. If the holding period is slightly for more than a year or little more than that, I would suggest that, if she can average, because beyond this, I don't think the stock would go down. Most of the negatives have got factored in, and the more important fact is the moment the government announces some infrastructure or maybe power sector reforms which possibly would be coming in soon. My guess is, this is a rich asset play which possibly could give a good return provided she holds on for a period of say 12-18 months. It could possibly be a stock a target price of roughly about 26 to 28, but she will have to exercise patience and she'll have to average, because the cost price at this point of time is pretty high, and unless she averages, she won't be able to get the benefit of the upside.
Okay, so Preeti, Avinash believes that you need to be patient with this particular counter despite the fact that you're losing out close to 11,000 rupees. He thinks that most of the negatives have been factored in. But Mitesh, on the charts, the counter has actually made a very smart recovery from those lows of close to 11 rupees. It's actually, ended up being a penny stock at this point in time. And we've got that 100-day moving average also, which is acting as a bit of support. So what would your targets be?
The stock actually bounced back in the month of Jan-Feb also, from lows of about 10 rupees to as high as about 20 rupees on the upside, and then we saw it tapering off to sub 11, sub 12 levels, and then the stock is bouncing back again. My sense is that the stock possibly, I think the entry point has been at a very long time, and we don't see a very big recovery happening over here, though I think I can't rule out the fact that 1920 can be retested on the upside. It will be very difficult for the stock to get past those levels unless until it goes through, I would suggest at least a 12 to 15 months kind of consolidation, because of the damage which the price has seen before this kind of bounce back started. So I think around 1920 I would suggest, cut your losses, exit the stock, and possibly enter a good fundamental stock which could, help you recover the money which is lost in this stock.
Exit around levels of 18 to 20. Preeti Rani, that's the advice coming in on GVK Power from Mitesh. Time for a quick break right here on the show, but up ahead on the other side, Pankaj Parikh's portfolio is up for discussion.
And here are the 3 ways that you can participate on your favorite show, Buy Now Sell Now. So write in to us at bnsn@etnow.tv. You can message us any stock-specific queries at 58888 or call us on 022 24837 111 and we promise to take them up. Good to have you back with us on BNSN Weekend.
Well, of course, we have our Portfolio Advisor segment, and this time around, Pankaj Parikh wrote into us. So let's get a glimpse of his profile and what his questions are.
In-depth study and sound management are the pillars on which chartered accountant Pankaj Parikh bases his investment decisions. One of Parikh's earliest bets was to take a contrarian long call on Tata Steel in 1984, which reaped him a return of 40% within a month as the steel sector was decontrolled. 61-year-old Parikh has learnt to focus on fundamentals and not pay too much heed to tips and rumors.
I rely on the media report, on the interviews with the management. So you get a feel of the top men, and then every quarter if you hear for 3 years, especially if I'm holding the stock, like say Infosys, if I hear them every quarter, there's a sense of honesty.
Pankaj manages his portfolio actively. He trades stocks as and when opportunities present themselves and has over the years learned to separate investment themes from short-term ideas. Pankaj focuses on about 10 stocks in the former and between 3 and 5 trading picks. And large caps dominate his current portfolio, as do some stocks that may get delisted at a huge premium. Pankaj is interested in making a significantly higher return on short-term ideas.
For a trading portfolio, around 24 to 18%, because it's high risk also. So if I don't, and I see a time frame of 3 months to around 1 year, which I can hold on in the trading to carry forward. And in an investment portfolio, I say, kind of 3 years period, and there the value buying portfolio also comes in.
So while Pankaj is already clocking strong returns, let's ask our experts if we can give his portfolio a further boost. Right, so Avinash, this is a 61-year-old investor who's written in to us. So he's got largely a portfolio that's dominated by large caps. So give us a sense of what you make of the level of diversification in the portfolio and the kind of levels he's picked up the stocks at.
No, I think the entire portfolio has been well balanced in the sense, both from the asset allocation side as well as from the sectoral side. I think clearly he has, selected pretty good stocks, and even the entry prices have been pretty good. Especially I would like to, comment on the fact that he's bought a Tata Motors at 195. So obviously, he's entered the stock pretty early. So clearly, I think in terms of the portfolio balance as well as asset allocation, it looks good.
Okay, so looks good in terms of portfolio balance and asset allocation. Mr. Parikh, we're taking on your first 3 stocks. Tata Steel, Mahindra Satyam and BOC India. Avinash, what would you advise him on these first 3 stocks?
As far as Tata Steel is concerned, I would suggest, that he should hold on. I think clearly, in terms of the company's European operations, I expect some recovery in the first quarter, and hopefully, the numbers which would be coming in the coming weeks. My guess is, Tata Steel should be doing better in this quarter. So he should hold on. He should hopefully get a price of 550, 560 if he holds on for at least a year and a half. As far as BOC is concerned, I would say that this is a strong buyback candidate. In fact, Linde Germany holds 89% equity stake, and earlier they tried to buy back the entire 100%. They were not successful. So clearly, looking at the June 2013 deadline, my guess is this will be one of the stocks where possibly a buyback is definitely on the cards. Possibly a price of roughly 550, 560. Again, if say 12-15 months, because by that time the stock should gather momentum. And Mahindra Satyam, as you are aware, this company has now is going to be merged with Tech Mahindra. The investor would be getting Tech Mahindra shares. So Tech Mahindra definitely, by buying into the Mahindra Satyam business, would get definitely better. My sense is, he should hold on. Once he gets Tech Mahindra shares, I think he should look out for a target price of roughly about 830, 840. So again, another 10-12% upside, from the kind of levels, from the current levels.
Okay, so Mr. Parekh, you can remain invested in Tata Steel, Tech Mahindra as well as BOC. But let's take up the next three counters then. Honeywell Automation, that's again a delisting candidate, and HDFC as well as an HDFC Bank. What do you make of those?
I would say that the same logic applies for Honeywell Automation. In fact, here also, the company's equity largely is held by Honeywell Automation, and here again a buyback candidate is definitely on. The company has actually shown remarkable, growth in its top line as well as bottom line over the years, and has been a favorite for the investors. In fact, the kind of price Mr. Pankaj has bought, I think he's got a reasonable margin of safety here, so he should hold on. My sense is in the next 12 to 15 months, probably a buyback price of 2,700 to 3,000 rupees could very much be possible. So clearly he should latch on to the value. And as far as HDFC Bank is concerned, clearly I think amongst the private bank space, this is one of the banks where consistently for 8 to 10 quarters we have seen 25-30% bottom line growth. So even in the kind of a tight money scenario, when credit growth was slightly difficult, this bank has done pretty well. So even in the coming quarter, my sense is this 25-30% growth momentum should be maintained. He should hold on. I mean, probably over the next 12-15 months, at least conservative price target could be about 650 odd.
What about an HDFC, Avinash?
HDFC is a holding company for HDFC Bank as well as for the other businesses. So here also, I mean, in terms of the core business model, I continue to be positive. In fact, in terms of loan growth, one could expect steady growth of roughly about 20% even in this coming quarter. Here probably the wait would have to be longer, because the kind of business HDFC is, probably it takes a longer time for the stock to get re-rated. But clearly, if he has a 2-year view, I think a price of 750, 770 is very much possible. But he should hold on.
Okay, and let's take it to the last stocks, Avinash. These may be blue chips, but there are a little bit of worries in terms of earnings for Infosys and Tata Motors with the slowing sales in the interest rate environment.
Coming to Infosys, Avan, my suggestion would be that looking at the way Infosys reported its Q4 numbers, I think it's very clear that in the very short term the stock could underperform, and possibly there are reports that company could possibly scale down its dollar guidance to roughly about 7-8%. This definitely is not good news, and probably could make the stock go down say by 5 to 6% in the very short term once the Q1 numbers are announced sometime next week. But clearly, from a relative positioning point of view, I would suggest that instead of Infosys, if the investor Mr. Pankaj can invest in Hexaware, my suggestion is he could possibly make better returns in the next 6 to 8 months, considering the kind of valuation it trades at and the kind of numbers it reported in the Q1. So typically, if somebody wants a better return, I would say that at least partially book out of Infosys and invest in Hexaware. I expect a price of 160 over the next 12 months.
And finally, what should he do with the Tata Motors?
When Tata Motors, I think the kind of entry price he has entered, I think he should comfortably take profits off the table. I think today, if I'm not wrong, I think now Tata Motors trades at around 240 plus. Considering the kind of weakness on the domestic CV business cycle side, JLR numbers side, and margins getting more and more weaker, and more importantly the Chinese market showing clear signs of weakness, my sense is that the coming quarters could be a difficult quarter for Tata Motors. And although the longer term prospects may be good, in the shorter term it could be possible that Tata Motors could possibly come at a level of 200 odd again. So I think he should book profits there, and probably look at a stock like say Federal Bank, where I feel that the kind of valuations the bank trades, it trades at about 1.28 times FY13 book. And in terms of its kind of brand franchisee, in terms of names, in terms of its CAR ratio of 14%, my guess is you're getting a very quality bank at a very throwaway kind of valuation. So clearly from alternative point of view, getting out of Tata Motors would be really a good decision, and buying Federal Bank at the current level of 450 would be fine. He could get a price of roughly 510 in the next 6 to 8 months.
Okay, so Mr. Parekh, you had Avinash who had a look at your entire portfolio. Here are the changes. Hold on to Tata Steel, Tech Mahindra, BOC. You can get strong upside targets on all of these counters. Tata Steel 550, Tech Mahindra 820, as well as a Mahindra Satyam, a target of 72. Honeywell Auto, also hold on to that one. Get an upside target of 2,700. HDFC, an upside target of 750. And HDFC Bank, you can look for an upside target of 625. Exit and Infosys as well as a Tata Motors, you can look to buy into an Hexaware. It'll give you a good return of 155, as well as a Federal Bank, expect an upside target of 510.
Okay, but here's a disclaimer then from our end, not just for Mr. Parekh, but all the viewers watching this show, that the portfolio that's been recommended here, it's a model portfolio, so please consult your individual investment advisor before taking any investment decisions.
We slip into a short break right here on Buy Now, Sell Now Weekend. On the other side of the show, Mitesh Thakkar and Avinash Govardhan will be giving us their top ideas. Welcome back. Still tuned into Buy Now, Sell Now Weekend.
Well, time then to get you top trading ideas from our two experts. And Mitesh, to you first, what is it that you've spotted for the week ahead?
There were two stocks, I think they have displayed totally opposite price movements in the last few months, but I think it's more of a reversal call, and Asian Paints is a sell. Since peaking out at 4,000 rupees on the 31st of May, we have seen that the stock has kind of gone sideways in a market which is moving up. The stock has come out of its outperformance mode, is getting into corrective mode. So this one can be sold with a stop at about 37.75, 37.80. And I suspect some kind of price correction which has been long overdue has started, which could take the prices down to levels of 3,500 to about 3,450 on the downside. A buy is on Adani Enterprises, which has been making continuously newer lows but has been extremely oversold on the longer term charts. In the short term, it's trying to do a bounce back over here. It's managed to get past the short term averages, 10-20 day averages. I think it could enjoy good momentum and a corrective bounce back over here. Can be bought with a stop below 223 for a price target of 260 on the upside.
Okay, so it's a sell on Asian Paints with a target of 3,500. Buy Adani with an upside target of 260. Avinash, what have you got for us?
Avan, I've got two stocks. First one is on Alembic Pharma. Alembic Pharma is a leading company, in the API as well as in the formulation space, and currently it trades at around 57 rupees. The company has been a very large player even on the export side. In fact, they have, developed 38 ANDAs and almost 3 ANDAs have been launched in the US. More importantly, it's a branded play. Company has got very visible brands like Glycodin, Protein-X, Zeet, Exportant. So, in fact, in terms of the formulation business, the business is more about brands. In terms of valuation, the company trades at very inexpensive valuations of roughly about 7 times FY13. And in terms of the business, last couple of years, the company has been doing pretty well. The top line has grown on an average growth of about 20-22%, with ROEs and ROCs in the region of 25 to 30%. So I'm expecting the same kind of traction in the coming year, and probably for FY13, the EPS should be roughly about 8 to 9 rupees, and for FY14 it should be about 10-11 rupees. So clearly, from an investment standpoint of view, this stock can give you a good 25-30% upside. My target price is 79 for the next 12 months.
And Avinash, what about your next pick for the long term then?
The next pick is Mega MCX, which has got listed recently. In fact, MCX is very close to its IPO price. The company has a very strong business model, and why the reason I like it is because the business is very asset light, and by virtue of operating leverage, the profitability for MCX can increase quite significantly. In fact, in terms of financials, the company reported very good numbers for FY12 with a bottom line of almost 286 crores last year. This year, conservatively, despite the fact that volumes have been quite mediocre in the first quarter, my guess is volumes would pick up in the second half. You could expect a EPS of roughly about 65 to 68 for FY13. And more importantly, there have been some strong market reports that MCX could possibly get regulatory approval for the equity exchange business very soon. So that could also be a big sentiment booster for the stock. My guess is if somebody can buy the stock and hold on for a year, he should be getting a price of around 1350, 1400. So definitely a good portfolio pick.
Okay, MCX and Alembic Pharma. Well, with that, we'd like to thank both Mitesh as well as Avinash for joining in on the show and being with us this half hour.
And with that, of course, we wrap it up right here on BNSN Weekend. Thanks very much for watching. But do remember, you can catch your favorite show on these three timings: on Saturday mornings at 10 o'clock and Sunday afternoons at 2 and Sunday evenings at 8 p.m.